The stock market sell-off continued on Monday as investors worldwide are scrambling to try to adjust to all of these latest announcements from President Donald Trump and the increasing tariffs placed on the United States trading partners. I've been working overtime trying to gather more information to help with your decision making. In this video, I'm going to look at and revisit Supermicrocomputer and answer if this stock is a buy following the lower prices, following the stock market declines. I've made several adjustments to my research on Supermicrocomputer, and there's been major changes to my proprietary discounted cash flow valuation model, which I'll share with you in this video. And then I'll update my buy recommendation for Supermicrocomputer.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Of course, the biggest reason why investors have become so interested in Supermicrocomputer stock is because of the absolute surge in revenue in this company's business over the last 2.5 years. Supermicrocomputer helps install data centers optimized for artificial intelligence. And that's the category of AI where investment is booming. This is where Microsoft, Amazon, and Alphabet are spending hundreds of billions of dollars building out their capabilities. This is the computing power that supports large language models like ChatGPT. Supermicrocomputer's revenue growth for several consecutive quarters exceeded 100%. And so this is something investors have grown attracted to as a result of those circumstances. But remember, Supermicrocomputer was also caught up in a scandal in that it failed to report its financial statements on time. Its auditor resigned, citing a management team that wasn't transparent in reporting its financial statements and working with the auditor. And so Supermicrocomputer had to hire a new auditor, which again didn't really give too much confidence in the company's financial statements. So Supermicrocomputer has been through a lot in these last 2.5 years. It's taken investors on a roller coaster ride. Now, all that aside, the company's business is booming. As you can see here, revenue jumped to $21 billion in the trailing 12-month period. That's up from less than $5 billion in 2021. And I don't suspect this company's revenue growth rate will slow down anytime soon in any major way. Of course, I think the growth in spending on these data centers for AI is going to slow down if these tariffs remain in place, which I think they look like they are staying in place. And so businesses and enterprises are going to pull back their spending. And so that's going to be a headwind to the growth rate for Supermicrocomputer. But that's okay. It's growing so quickly that a slowdown in growth rate is not going to be all that much bad news for Supermicrocomputer. There's other things that would be more bad news for Supermicrocomputer investors, which would be further difficulties in financial statement reporting or further indication that management wasn't transparent with investors with reporting financial statements, etc. That would be more bad news for Supermicrocomputer instead of a slowdown in revenue growth. Now, the misreporting in financial statements or delays in financial statements reporting, the risks associated with that were exacerbated because the company's cash flow from operations were also negative. You can see that big turnaround in cash flow from operations just as the company's sales growth was booming. And I've talked several times about why that's okay for a business that's selling hardware to other enterprises for this to happen, because the way the accounting for these work is sometimes a business like Supermicrocomputer that doesn't have too much negotiating power will have to pay suppliers for the products it receives before Supermicrocomputer gets payment from the companies that it's selling to. I mentioned, Amazon, Microsoft, Alphabet. These are big, powerful companies that can require Supermicro Computer to give them favorable terms if they want to deal with them. And Supermicro Computer would be willing to do that because they don't want to miss that sale. So they'll tell Amazon, they'll tell them, look, we'll give you 90 days to pay us back or 120 days to pay us back. Just let us have this sale. Let us have this contract. And then Supermicro Computer will then have to go to their suppliers and say, look, we'll pay up front. Just let us get these materials earlier than maybe some of our competitors might. And so that lack of negotiating power for a company like Supermicro Computer can lead to what's happening here in a negative cash flow from operations when sales are booming because it's paying for a lot of product up front and it's not getting the cash from its buyers. And so it can lead to this negative cash flow from operations, which is okay on its own. But when also you're dealing with a management team that's under question for financial reporting, then you start to think, well, what's really going on here? Is that really the reason why cash flow is negative, or is there something else going on? That's why this cash flow from operations negative number on its own is not something to be concerned about in this situation. But when you pair it with the misreporting or the questions around the financial reporting, that's when it becomes a little bit of a risk here, more so than usual. Supermicro Computer's returns on investor capital also jumped in response to the increase in revenue growth at 21%. It's still solid. It's down from the highs of over 30%, but even at 21%, it's solid for a business like Supermicro Computer. It's not great, but it's also not bad. And I don't like the trend line moving downward, but that's to be expected as the company's average return on investor capital was around 10% prior to this boom. So if this settles at around 15%, I think it would be reasonable for Supermicro stock investors. I like to compare a company's return on invested capital with the weighted average cost of capital. For Supermicro Computer, their weighted average cost of capital is 11.31%, and the return on investor capital was over 21%, so almost a 2-to-1 ratio. That's pretty solid. That's acceptable. That's on the better side of many of the companies that I follow. Back to my intrinsic value calculation for Supermicro Computer. The big changes I highlighted in the introduction of the video were to the free cash flow expectations. I previously had 2025 as a year of positive expectations for free cash flow for Supermicro Computer. I adjusted that back to being negative because of these headwinds, tariff related and Supermicro Computer related. Now I expect negative 480 million in free cash flow, whereas previously it was positive. The 2026 free cash flow, I also adjusted downward to 410 million. This was up much higher before I adjusted these lower this morning. And the 2027 free cash flow, I also adjusted lower from where it was previously. So the next 3 years, I adjusted the free cash flows lower for Supermicro Computer stock. And I also adjusted the risk-free rate here because the last time I evaluated Supermicro Computer stock, the 10-year government bond yield was up over 4.5%. So I lowered that to 4%, where it's closer to where it's trading today. All in all, the intrinsic value per share came to $66.46, which is more than twice the current market price of $31.54. So measuring by DCF, even after the adjustments lower, Supermicro Computer stock looks undervalued. And then when I look at it on a forward price to earnings basis, trading at a forward PE of 8.5, this is about where the stock traded for before it boomed during the AI increase in revenue. Let me share that with you. When I zoom out here for a 3-year chart, you can see that boom in valuation here for Supermicro Computer stock, which, by the way, if you remember, around February, March of 2024, I told investors to take profits in Supermicro Computer stock and sell. And I hope you listened to that recommendation and sold that stock during that time. I argued that this valuation was unsustainable, that it was up here ahead of itself, that it was getting too excited. Investors were getting too excited with the momentum. Now at a forward P of 8.9, it's about where the stock traded for before that hype-induced increase in valuation. So to answer the question, do I think Supermicro computer stock is a buying opportunity here? I'm going to say yes, but only for the very risk-tolerant investor. This business is more risky than usual because not only are you dealing with business risk, you're also dealing with financial reporting risk. So you're getting all of the regular business risks that you're getting with the addition of tariffs on top of that. And then you're also dealing with the company that has some financial reporting risk as well. So you're dealing with a very above average risk situation, but the stock is undervalued according to uh, every which way I've conducted valuation on this company.
I'm excited to announce a brand new private Discord to our channel members at the VIP Discord tier. It's a great place to directly connect with me, ask questions, and engage with a community of like minded investors. Spots are limited, so join us today.